The Nasdaq market is currently closed, and the last reported closing price for Rezolve AI PLC, trading under the ticker RZLV, was $5.13 as of October 10, 2025, at 4 p.m. EDT. This represents a substantial decline of negative 0.65 or minus 11.25% from the previous close, on an extraordinarily high volume of over 29 million shares. Now, the common expectation is that a stock selling off that heavily is simply being dumped due to poor performance or bad news. The reality, however, is far more complex, especially for a speculative name like Rezolve AI PLC. The significant drop on massive volume, which is nearly an order of magnitude higher than its average volume from a few weeks ago, suggests something deeper is happening than just casual selling. This looks less like individual investors liquidating positions and more like a forced institutional adjustment, or perhaps a very large block trade hitting the market after a strong run-up that topped out in mid-September near the $8.45 mark. The immediate insight here is that the sheer velocity of the move, combined with the volume profile, forces us to look past a simple AI stock losing steam narrative and focus on the very public controversies and acquisitions that have plagued and pushed this stock over the last few weeks, creating a volatile high-stakes trade. This is not the clean, smooth execution narrative that many growth investors hope for. It's a messy, high-beta trade with serious fundamental questions layered on top of technical volatility, which is a key distinction for anyone considering a position through an individual brokerage like Interactive Brokers or even an online investment platform like SoFi Invest. The general belief among the retail trading crowd is that Rezolve AI PLC is a high-growth AI play, an exciting contender in the conversational commerce and retail technology space, particularly after its public market listing via a SPAC merger. The promise is clear. Its proprietary large language model, BrainPowa, and its Brain Commerce suite are positioned to become the digital backbone for major retail players looking to automate customer engagement and checkout processes. This is the expectation, a sleek, futuristic tech company accelerating past traditional e-commerce models. But we have to challenge this narrative with the market's reality. The significant price decline is a direct reflection of skepticism and external pressures that contradict this flawless growth story. Specifically, the news flow around RZLV has been less about customer wins and more about defending itself against short seller reports. Over the last month, we've seen the company reject a misleading report and clarify SEC filings, all while shareholder law firms announce investigations. These are not the headlines of a smoothly executing tech darling. These legal and reputation-based headwinds are what have truly driven the massive selling pressure and volume spikes, creating a volatile high-stakes trade. This is not the clean, smooth execution narrative that many growth investors hope for. It's a messy, high-beta trade with serious fundamental questions layered on top of technical volatility, which is a key distinction for anyone considering a position through an individual brokerage like Interactive Brokers or even an online investment platform like SoFi Invest. The general belief among the retail trading crowd is that Rezolve AI PLC is a high-growth AI play, an exciting contender in the conversational commerce and retail technology space, particularly after its public market listing via a SPAC merger. The promise is clear. Its proprietary large language model, BrainPowa, and its Brain Commerce suite are positioned to become the digital backbone for major retail players looking to automate customer engagement and checkout processes. This is the expectation, a sleek, futuristic tech company accelerating past traditional e-commerce models. But we have to challenge this narrative with the market's reality. The significant price decline is a direct reflection of skepticism and external pressures that contradict this flawless growth story. Specifically, the news flow around RZLV has been less about customer wins and more about defending itself against short seller reports. Over the last month, we've seen the company reject a misleading report and clarify SEC filings, all while shareholder law firms announce investigations. These are not the headlines of a smoothly executing tech darling. These legal and reputation-based headwinds are what have truly driven the massive selling pressure and volume spikes, creating a volatile high-stakes trade. Drilling down into the recent trading behavior, the price action leading up to the Friday close was a clear sign of weakness. The stock opened at $5.72 and, despite attempts to hold higher, continuously ground lower, hitting an intraday low of $5.07 before settling slightly higher. This is a bearish technical pattern. A weak open followed by a lack of buyers willing to step in and defend the lower range, suggesting that the initial selling pressure was met with follow-on selling throughout the session. The average daily volume for RZLV had ballooned to nearly 38.4 million shares recently, far exceeding its norm, which tells us that the float is being heavily traded, indicating high short interest, significant institutional activity, or both. The narrative of growth investors happily holding their positions evaporates when you see this level of churn. From a technical perspective, breaking below the $5.50 support level, which served as a consolidation point earlier in the week, has now set the stage for a potential retest of its lower support range. High volatility stocks like this are highly sensitive to market-wide sentiment, and given the general sell-off atmosphere in the broader tech and NASDAQ market indices on Friday, RZLV acted as a high beta expression of that fear. When markets get shaky, traders often dump the most speculative, least profitable, and most controversial names first, and RZLV fits that profile squarely. Furthermore, while companies like Nvidia stock and Tesla stock have clear, well-established narratives, RZLV's narrative is still being written in real time, making it an easy target for short sellers looking to profit from any sign of weakness or uncertainty. The institutional side of the story provides an interesting counterpoint to the bearish price action. While the stock has been hammered, Rezolve AI PLC has simultaneously been quite busy with M&A activity, announcing a series of acquisitions like Subsquid for data and payments backbone and SmartPay for digital asset infrastructure, along with an announcement regarding a shareholder transfer to a new global institutional investor. On one hand, the expectation created by these press releases is of rapid strategic assembly and expansion, validating the company's grand vision for agentic commerce. On the other hand, the reality of the stock price decline suggests that the market views these acquisitions with deep suspicion, potentially seeing them as dilutive, expensive, or a sign of chasing growth over sustainable development. The market is effectively saying, we see your new acquisitions and your talk of a path to $500 million in ARR, but your stock is still falling because we're focusing on the negative cash flow, the low current ratio of 0.24, and the heavy reliance on capital raises that inevitably dilute shareholders. This tension between management's optimistic public statements and the market's skeptical response is the core theme for RZLV stock right now. Investors using platforms like Fidelity Investments for their long-term growth accounts are likely watching this with caution, preferring more established growth names, or perhaps exploring Fidelity ETFs that offer broader tech exposure without the single stock risk of a name like RZLV. For a clearer picture, let's briefly step back and look at the company's actual business model, setting aside the recent drama. Rezolve AI PLC is a pure-play artificial intelligence company based in the UK, specializing in providing AI solutions primarily for the retail and e-commerce sectors. Their core product, Brain Commerce, uses their proprietary large language model, Brain Power, to enhance the online shopping experience. Think of it as an ultra-advanced conversational tool that significantly improves site search, product discovery, and checkout conversion rates. They aim to reduce cart abandonment and increase the average order value for their clients. In financial terms, this is a cloud-based service model. As of the Q2 2025 financial data, the company's revenue was reported at a modest $3.16 million, though that represents a very high year-over-year increase of over 425%. However, the company is still heavily unprofitable, posting a net loss of $28.93 million for the quarter, reflecting the significant costs associated with building out this technology and securing market share. They are a classic high-burn, high-growth potential software business. The company's recent public listing, which stemmed from a SPAC merger with Armada Acquisition, initially gave them access to capital, but their balance sheet shows total liabilities of $94.39 million against total assets of $80.01, resulting in negative total equity. This financial foundation is what makes the stock highly sensitive to market sentiment and why any negative report, even from a short seller, can have such an outsized effect. This is the fundamental risk you wouldn't typically have to stress over with a blue-chip name you might manage with Fidelity Wealth Management. The immediate headwind for RZLV remains the high level of investor alert and litigation news. When multiple law firms announce investigations into claims of overstated revenue and artificial intelligence capabilities, as seen in the recent news, it creates a cloud of regulatory and legal risk that scares away all but the most aggressive traders.
This is the reality that is currently crushing the expectation of a smooth AI adoption curve. Traders operating on platforms like Robinhood or SoFi Invest, who are looking for quick gains in AI stocks, might see the massive sell-off as a buying opportunity. But the informed investor knows this is a falling knife until the legal and financial questions are definitively resolved. The technical levels have now shifted. With the stock closing near the daily low on high volume, the critical watch zone is the $4.50 to $5 support area, which has some psychological and minor technical significance. A break below $4.50 could accelerate selling down toward the $3.50 level. On the flip side, any significant short-term rebound will likely need a strong catalyst, such as a major customer announcement that definitively refutes the skepticism about their business operations, or a clear and decisive rebuttal to the litigation claims. The market is not waiting for a simple earnings beat. It's waiting for proof that the business model is solid and the legal overhang is clearing. Looking ahead, the future outlook for Rezolve AI PLC is bipolar, existing entirely between its maximum analyst estimate of $15 and its more grounded minimum estimate of $7. The best-case scenario, the upside expectation, relies entirely on the management team's ability to execute